Maybe not a surprise when you hear China retaliating and over the weekend just trying to add all this up. What comes next? We don't know when the next talks are scheduled. We know that the tensions are ratcheting up on both sides.
Right. Well, I mean, earlier this morning, everyone's waking up wondering, what is China going to do? How come they haven't responded yet? So they responded. So it's to be expected. The futures are weak this morning, which is somewhat expected. And so I think it's the initial reaction. Let's see how things shake out.
If this is the only retaliation, I'm surprised that people are really selling that deeply, because I would expect them to do at least this, which is to take $60 billion of goods and raise the tariffs by up to 25%.
Right. I think you're right there, Becky. There's a very reactionary component to things. And we almost forgot, last Thursday and Friday, the market was weak in the morning. The pattern in May we've seen constant, the market open, sell off, and then once Europe closes, literally within about 15 minutes of the European close, the U.S. markets the last two trading days have bottomed and have rallied throughout the trading day.
Having said that, last week was still the worst week we've seen for the markets all year.
Right. It's been a phenomenal year, though. So, I mean, if we're going to get really bent out of shape, about a 3% pullback, which is a run-of-the-mill pullback, that is, that shows how spoiled we are. 400 points, that's nothing to, scoff at. So I think what you want to do is you want to see how things play out. We haven't necessarily seen internal indicators break down at this point. So there's nothing necessarily saying that this is a major sell-off. But, you just have to listen to what...
How about 500?
Yeah.
We may be 600 within a minute. I mean, from Grand Central to here, it was 300.
Look, I get the feeling that people are still trying to buy the dip every time there is a dip. But is that a smart strategy? Is that something you would tell people to be trying to do right now?
Well, I think if you're holding equities right now at this point, I don't think this headline like today is to react like the futures are reacting and start selling off everything en masse. See how things shake out. See how once people have time to think about it for a little while. See how the market shakes out through the remainder of the day. We've been talking about how Uber's been so weak.
But flip it around. If you have cash, should you be buying today?
I think you can incrementally add positions. So if you do have cash, you may want to look for companies with U.S. exposure, not companies that are going to be caught in the midst of the headlines, which don't seem to show
like
any.
Boeing, Apple, Caterpillar, Intel, all the stocks we just listed.
A lot of international exposure. Technology, as Joe was saying, is weak. A lot of Chinese exposure. Last week, the Fed came out and said in their financial stability report they were worried about some lofty valuations in the market. Well, the PE of the S&P 500 is 1 point above its 25-year median. So we are a little bit above average or above the median, but not ridiculously so. The two sectors that are the furthest below their median are healthcare and financials, which are two sectors which don't have very much international exposure.